Be Wealthy and Smart, episode 1441.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the S&P 500 was down this week. Now, this has been an exceptional year. And we have the S&P 500 returning 27% this year. The Dow is up 16.55%, and the Nasdaq's up 32.35%. On top of that, silver is up 27.28% year-to-date, and gold is up 28.09% year-to-date. Even the crypto markets have been spectacular this year. So why then, all of a sudden, are we pulling back this week? Well, we've had a lot of exuberance since President Trump got elected, and some of that is probably profit-taking or needing to take a rest. But some of it is also from the inflation data that came in, because it's showing inflation is a little bit sticky, and the Fed is talking about slowing their interest rate cuts next year. Now, they're still expected to cut 0.25% next week, and there's about a 99% chance that they're going to do that, according to traders. But things are getting a bit frothy, PE ratios are stretched, and the mega cap tech stocks are in the trillions. Jay Hadfield, CEO at Infrastructure Capital Advisors, said, "We're kind of stuck in this trading range. The Nasdaq will outperform, small caps will underperform, and the Dow will underperform till we get some catalyst." Now, the catalyst he's talking about is some good news to boost profits higher, and that may be from some unexpected economic good news. But right now, the Dow is headed for a 1.6% decline this week, and the S&P looks to be down 0.7% this week, while Nasdaq is on track for 0.03% loss this week. Tech maker Broadcom had great news this week, which boosted the stock about 21% and made it a trillionaire, giving it a $1 trillion market cap. But the Federal Reserve Vice Chairman Robert Kaplan came out and poured some cold water on expectations. He said he's looking to see a slower pace of rate cutting from the Federal Reserve, and said inflation, I think, looks a little stuck here. There's some things better, like in services. There's some things worse, like in food and vehicles. But higher interest rates are necessary to keep up with the current level of government spending, said Kaplan, and he's looking to see how major spending programs will be managed under the new presidential administration. He's also looking to see more workforce growth, which is disinflationary and has allowed for rate cuts this far, he said. Will we actually get fiscal spending under better control and not as stimulative? We got an extraordinary level of fiscal spending going on right now, and I think some of this strength, I think on the margin, is a little bit artificial, he said. This Fed rate discussion is not a no-brainer. So the market seems to be reacting to a little bit of uncertainty with interest rates, although I don't think the uncertainty is about the cut next week. It's really about interest rate cuts in 2025. Otherwise, things are looking up, and I think this is pretty much normal profit-taking. And this year is going to wrap up and be way above the typical 10% average annual return for the S&P 500. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.